Hey, what's going on, crypto people?
It is the crypto siege with another day in the life and the crazy life that is the digital asset space. What's going on, guys? Good morning. Happy Wednesday to you. What an exciting time to be in the digital asset space, guys. Very interesting news. Shout out to Crypto Eddie. Heard that Ripple has a new hire. I could not find any information on it, but apparently some extensive background working with MasterCard and Visa. The guy's name is Calvin Lee, but I haven't been able to find anything on that yet. But I wanted to cover this with you guys. So here it is, guys. Listen, this is your XRP Ripple daily news in 0 to 10 minutes. Let's do this. Banks have to embrace distributed ledger tech, even if it kills them. Banks have to embrace distributed ledger tech, even if it kills them. Chuck Fried is the president and CEO of TXMQ, a technology, consulting, and integration company specializing in the financial services industry. He has more than 30 years of experience helping banks set up, manage, transform, and evolve their IT systems to improve customer service and reduce the risk of fraud and data loss. As someone who spends a large amount of time inside IT departments of major banks, I like to tell people two things. The first is that some of the brightest and cleverest people I've ever met work in bank technology groups. The second is that many banks have facilitated a culture of complacency when it comes to technological transformation. I find this attitude often presents itself as fear, more specifically, fear of change. It's understandable. Over time, a leading market position, steady successes, and routine, if not staggering, annual growth starts to make one feel immune from competition. Interesting insights from this guy. You begin to become complacent, and what is complacency really but fear of change? Nowhere is this complacency more evident than in the way the banking industry is looking at distributed ledger technology, DLT or blockchain, right? I see DLT treated as anything from a passing fancy to an unwelcome distraction by banking IT leaders. In my experience, these attitudes are the result of a lack of information about the tech. A lack of information about the tech. To that end, here's what I tell bank leaders about blockchain and DLT, right? And that's what Ripple has been doing, right? Working with these central banks, right? Educating them on what this technology is really all about. So the power of entropy. For decades, banks operated in virtual vacuums. Few external pressures could touch them. Customers made deposits and took out loans. The delta between saving rates and loan rates was the bank's operating profits. That business model created tremendous wealth for banks in the United States and around the world. The system all worked perfectly until it didn't. Throughout banking history, what little innovation that has occurred has proceeded at a glacial pace, typically being driven by what we would today call fintechs. New technologies came primarily in the form of point solutions built by outside firms. Check imaging, for instance, didn't originate in bank in-house technology groups, but rather at external firms that were later absorbed by banks. In short, most of the tech we see, used, and expect from our banks was built somewhere else and later acquired by banks. Guys, I got to tell you, this is an excellent read, like amazing insight, right? From a guy who knows, has been on the inside, and he can kind of lay out for us, all the different reasons, whether it be ignorance, whether it be, apathy, right? I'm sure that's a lot of it. Complacency is a kind word of kind of put it in. But I love what Margine Delatine said, and I believe someone else said it as well. Maybe it was Brianne Manigan. The banks are going to be disintermediated if they choose not to participate, right? Now, though, banks are increasingly threatened by the rise of competitors like alternative banks and the modern fintech economy. These businesses come primarily out of Silicon Valley startup culture, which emphasizes disruption rather than continuity with established business models. With either innovative tech like mobile banking or innovative business models like online lending marketplaces, or both, they are gobbling up customers' bases that have been traditionally held by the big banks. Take mortgages, for instance. The top 5 US banks accounted for just 21% of mortgage originations in 2019, compared to half of all mortgages in 2011. Wow. Beyond inophobia, beyond inophobia. Interesting. These developments are forcing banks to confront their fears of change in a way they haven't had to previously. The result is that many are forcing themselves to innovate faster than they ever have before. That's why when I work with banking clients, I'm constantly bringing up DLT as one of a number of new technologies to explore. It should be taken as gospel that banks have an inherent fear of innovation, but even within that mindset, DLT occupies a uniquely anxious space. Technology may be all ones and zeros, but there's something about digital ledgers that makes banks' IT teams' heads spin. What I tell these skeptics is that while they've been complacent and resting on their laurels, blockchain proof of concepts have been quietly winning the day. The technology works amazingly well for the right use cases. Blockchain startups pursuing application from cross-border payments to supply chain management to digital ID management are now too numerous to name. Interesting, the ones that come immediately to his forefront, right? To his mind: cross-border payments, supply chain management, digital ID management, right? Major economists have in recent years embraced blockchain as part of a solution to address various global finance challenges. The upshot: if your banking institution isn't already putting R&D work into blockchain solutions, then you're already behind. I found that clients don't really know what to do with DLT. They don't understand the right use cases, and so often suggest ideas that sound really interesting, but aren't well suited to the technology. Educating banks on what DLT can do and what it cannot is thus crucial, right? Ripple. Banking on blockchain. It bears noting that some of the most interesting and potentially game-changing use cases are those that present the greatest existential threat to banks. Banks are middle people, intermediaries. Customer deposit, banks lend. What if we don't need this service? And could eliminate this need for the bank as a third party to transact? What if we could interact directly using DLT without a need for financial services intermediary at all? This is the true promise of blockchain: transactionality in a trustless world. This is where fintechs play and banks fear to tread. Thus, paradoxically, DLT is both a threat and an opportunity for banks. The threat, as laid out above, is that banks' own resistance to change will lead them watching the opportunity of DLT pass them by. Because DLT is going to transform the economy with or without their leadership. If banks want to secure their futures, it is vital that they confront their fear of change and embrace innovation in all its disruptive splendor. That's the opportunity in front of them now. Wow. Shout out to this guy. Shout out to CoinDesk for getting this guy to write an article. Contributor right here, Chuck Fried. What a great read, guys. Hope you have a chance to check this out. Really, really interesting stuff. Again, Chuck Fried is the president and CEO of TXMQ, a technology consulting and integration company specializing in this in the financial services industry. Wow, 30 years of experience as well. So really, really great insight. And that is ultimately, that's a great inside look at what's really going on with the banks and why it's taking so long. Again, this intermediate is a real possibility for the banks. And, companies like Ripple have been educating on the fact, not just only educating on what's going on with DLT, also educating on the fact that if they don't pivot, right, if they don't adopt and move on, this technology will innovate around them, as Jay Clayton has said in the past, right? Very, very, very interesting article, guys. Very, very interesting article. And so, of course, you guys know about United States Treasury Secretary Steven Mnuchin appoints the Coinbase chief legal officer to oversee the banking system. This is massive in so many ways. I'm going to go over this really, really quickly. The U.S. Treasury Secretary Steven Mnuchin, a longtime cryptocurrency and Bitcoin skeptic, has named Brian Brooks as one of this country's top banking regulators. And we all know now that Brian Brooks and Steve Mnuchin have a history in the past of working together, right? So Brooks will serve as the next chief operating officer and first deputy comptroller of the Office of the Comptroller at the Comptroller of the Currency, after stepping down from his role as the chief legal officer at Coinbase, the largest cryptocurrency exchange in the United States. The OCC, established in 1863, is the primary regulator of banks and Federal Savings Association in the United States, issuing rules and regulations that govern the banks, supervisors, and taking supervisory actions against banks that fail to comply with otherwise engage in risky practices. Brooks' appointment to oversee the country's banking system may signal a change in the tide, as the Treasury gives Mnuchin's anti-crypto rhetoric and remarks made last year that he sees no need for the U.S. to launch a digital dollar. Brooks is an outspoken proponent of making the United States a leader in digital currencies, specifically by launching a U.S. digital dollar. And that is the biggest point for us in this digital asset space. Brooks, again, we've learned that he's worked with Mnuchin in the past. He's worked with Joseph Oetting in the past as well at a bank. I forget the name of the bank right now, but he is a big-time fan. Brooks is a big-time fan of the digital asset space, and he wants the United States to lead in that direction. You would not put this guy in charge, right? You would not make him the COO and the deputy comptroller of the Office of Comptroller of the OCC if you were not looking to move forward in the digital asset space. You wouldn't do it, right? So Brian Brooks wrote in a piece published by Fortune magazine in November of 2019, the time has come for a tokenized version of the dollar, and it's not just those of us in the cryptocurrency world who think so. In recent months, senior U.S. officials have been exploring the idea of minting greenbacks on the distributed ledger software known as blockchain. The idea appears inevitable. Absolutely love it. Mnuchin is tapping Brooks to ensure the stability of a financial system and its ability to foster greater economic growth for the benefit of all Americans, and describes the Harvard grad who holds a law degree from the University of Chicago as a strong leader with extensive experience in the financial services sector. Brooks will assume his new role effective April 1st, 2020, after having served as Coinbase chief legal officer since September of 2018. Not very long. Brooks is a former Fannie Mae executive vice president, general counsel, and corporate secretary. Joseph Oetting, who Brian Brooks and Steve Mnuchin worked with together as well, will step down as the current comptroller of the currency. This is a really exciting news, guys. I can't say it enough. You wouldn't put a guy like Brian Brooks with his attitude towards digital assets into this position you know, he is the regulator of the banks, primary regulator of banks and federal savings. You're not going to put this guy in that position if you're not moving towards this new asset class in the digital asset, which is the digital asset space. So this is great news for us. It really, really is great news. I've heard on the Telegram chat that, you know, Coinbase and ODL, that's a real thing. I don't know if it is. I'm hearing that it is. But in either case, Brian Brooks now stepping into that position is a great move, without question. It is a great, great move for us in the digital asset space. 1000%. So really, really excited about that. All right, guys, I'm going to wrap up this video like I do all my videos and remind you of this. Old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.